Now, Paris-based World Federation of Exchanges, an association of 58 publicly regulated stock market exchanges around the world, recently released updated data on its monthly measure of the total market capitalization of the world's major equity markets through the end of October. It shows that total value of world equities reached $60.2 trillion, which is the highest monthly world stock market capitalization since October 2007, which is several months before the global economic slowdown and financial crisis started and caused global equity values to fall by more than 50% and by almost $34 trillion. Now, to what can we attribute the record high numbers, and more importantly, is this healthy for the global stock market? Well, joining us live in the studio to give us some perspective is Dr. Byoung-joo, head of KL&P Consulting, and of course our regular commentator on this program. Good afternoon to you, Dr. Kim.
Good afternoon.
So the global stock market capitalization is now reaching pre-2008 financial crisis levels.
Right.
How should we interpret this?
Well, indeed, there are different views about looking at this number right here, and of course, as you mentioned, this is like 6-year high, and if we can take a look at the line chart that we have prepared here, it will tell us a very interesting story. Basically, what has been happening is the overall world stock market, equity market capitalization rose starting from about $40 trillion starting at 2005, and then the peak point was right before the 2008 crisis, as you mentioned, October 2007, and at that time the overall size of the world equity market capitalization reached 62 trillion US dollars, and the bottom of the valley, if you will, when the fall began during the 2008 financial crisis was February 2009, and at that time it shrank all the way almost like below half of the peak, 27 trillion US dollars. That was February, once again, 2009. And since then, it has been rising. And by the time of the end of 2011, we reached about the same point as what we saw at the beginning of 2007. And since then, it continued to rise. And now, where we stand at this point, as you mentioned, 60 trillion US dollars is about the level. Not exactly as high, but almost close to the peak that we saw at October 2007.
Now, obviously, this is no surprise because this is something that we have been anticipating more or less as, the result of the liquidity expansion in the United States, in Japan, in the EU, and elsewhere across the globe.
Right, indeed. This is exactly what we have been anticipating all along, indeed, as you mentioned. I mean, QE operation, for instance, in the United States, they're pumping in as much as 85 billion US dollars every month. And that liquidity, that cash or money that goes into the financial market will have to find a place to be invested. And, as the investors are searching for higher return all the time, this money goes around the globe, and, it's pushing up, of course, clearly the stocks in the United States and Japan and elsewhere altogether. But also, all around the world in different kind of asset markets, it's pushing up the overall, the asset price as a whole. And this is causing a lot of concerns and second thoughts in the minds of the analysts right at this point. We know liquidity is kind of like a medicine when the economy is low. You need more of those to push the economic cycle up. But when you reach the point where people wondering about whether there is a bubble or not, it turns into a poison indeed. And we have had so many different rounds of experience before, and this is the time a lot of people are having different thoughts about this.
Right. Medicine, when taken appropriately, is medicine, but you don't want to overdose it.
Absolutely.
And this is what it looks like is happening.
Absolutely.
Now, stocks are not the only one that is showing signs of a bubble, if you will. Other parts of the financial market is showing similar signs.
Yeah, clearly. I mean, we already know, like in different parts in the United States, for instance, their housing market have been showing signs of bubble, and a lot of people are saying, of course, it's not the entire country, but in certain locations, there are certainly real bubbles that they see in the U.S. housing market, and that is not limited to the United States only. Housing markets in Switzerland, Sweden, and as we all very well know, in China and Singapore, those are very famous cases. But what's even more alarming here is that in the United States, subprime, it's just kind of alarming word, but subprime loan is being now made to the small and medium industries in the United States. Small companies that seem to have a lot of high level of business risk, they seem to be getting these loans once again. And these loans are securitized, just as what we saw back in 2008 that caused the trouble, this housing, mortgage being securitized. And this kind of loans are being securitized with high rate of subprime. And sometimes these loans are charging about like over 8% interest rate and all that. And when people are seeing these kind of phenomena, they are getting alarmed, saying not only it's stocks, but all around the financial market, we seem to see sort of like this indication of bubbles.
Now, so what's ahead now? Are we expecting market adjustment, or are we expecting the bubble to burst anytime soon?
There are different views. Carl Icahn, he is the leader in terms of like M&A market in the United States. He's leading voice talking about actually possibility of not only just bubble here, but bubble popping sometime soon. But it looks like he's like a lone voice at this particular moment. He seems to be a lone ranger, if you will, talking about this doom scenario. Other people, such as Warren Buffett, he seems to be believing that it's not bubble yet. And Janet Yellen also agrees with Warren Buffett, saying it's not bubble yet. And also, one of the two economists who won Nobel Prize in economics this year, interestingly, he's the one who has emphasized the irrationality of the market. Robert Schuller, indeed. He's been saying the same thing. He's saying it's not bubble yet, and we will probably reach the level of bubble sometime soon. And economists like Paul Krugman, another Nobel Prize winner several years ago, he's now saying maybe a well-controlled bubble, of course it's oxymoron, a well-controlled bubble doesn't exist. Bubbles are hard to control, but he says like bubble under certain control is something that we need in order to further boost the market as a whole. So he's talking about something that's a very interesting idea here. And there are other kind of pessimists, but at this point, the majority seems to be believing that we are getting close to the level of bubble, but it's not the bubble yet. And once we believe there is a bubble point that we have reached, then there will be fear popping.
Right. What does this all mean for the Korean stock market, and more importantly, for Asia's fourth largest economy? The
thing is, analysts seem to believe that at this point, when people are thinking about the possibility of bubble in the United States and elsewhere, that actually could be good news for Korean stock market, where we have not seen very much of exciting rise of the index. It's been kind of like going up and down at around like 2000 level. And they're saying when people are concerned about bubble possibility elsewhere, they could actually relocate their capital into Korea, where the PER ratio, price for earnings ratio itself is still kind of low. So indeed, Korea market may once again be identified as another good relocation point where they can reshuffle their portfolio as a whole. So they say it's a good thing for Korean market for now. But the thing is, there are other pessimists who are saying right at this point in Korean market, we are dealing with the low yen fear or low yen trauma at this point. And a lot of stock investors are very much concerned about the weak yen at this point. And they're saying until that cloud clears, we may not be able to see any exciting movements of the investors coming into this market. So that seems to be the majority view at this particular moment.
Well, it definitely seems like the total market capitalization of the global stock market is something that we need to keep a close eye on. And because another, I guess, bursting of the bubble is not something that we can afford at this point.
Right.
So we will be keeping our eyes on that. All right, Dr. Kim
Absolutely.
Byoung-joo, thank you so much for today. We'll talk to you tomorrow.
Okay.